Hi, welcome to this video today. It's the 16th of December. It's Saturday. We're going to be looking at three trade setups today. They all include the yen, the USDJPY, EURJPY and GBPJPY. We think all the potential trade setups we're looking at today offer the potential in terms of profit of 500 pips or more. Now, regular viewers will know we're extremely bullish of the yen. Okay, we think it's on the verge of a massive move to the upside. We've done a good few videos over the last few weeks on the JPY, and overall, our JPY trading has yielded some decent profits, but there's just so much more to come in our view. Now, before we go to the trade setups, just want to make a point about trading at this time of year. A lot of traders say, we should pack up, come back, January the 7th when we're well into the new year. That's a huge mistake statistically. If you look back over the last 50 years, more currencies tend to form their high or low for the coming year in the period, particularly 26th of December to 7th of January. Historically, you also get nice movement in this period, so I see no reason to wind down. This is the time of year that we are probably most alert in our trading, particularly this year in terms of the yen. Now, what we're going to do is go to the trade setups just for new viewers. So I just want to stress what we're going to be doing is only focusing on big support and resistance levels that matter to key players in the markets. And to help us do this, we are going to be using the best tool in Forex trading, the COT, the Commitment of Traders report. If you don't know what it is, join our mailing list and we'll send you more details. But just want to watch the video through right now. Just keep in mind what we want to do is trade with smart money, commercial hedgers when their positions diverge away from speculators. Okay, now just one final point before we go to the charts. It is my view as of right now. If you want our full trading techniques, and our daily technical analysis major Forex pairs, you can get live access to our member center on the link beneath this video. Right, let's go to the first chart. We're going to look at USDJPY. We're going to look at the COT Net Traders data first. On the COT Net Traders positions, and just for new viewers, it's always going to be the foreign currency first. That's just the way they display the data. So JPY, USD. We're obviously trading USD, JPY. I'll reverse the chart around in a moment when we draw our levels, but just want to look at the COT Net Traders positions here and how the commercials and large speculators view the yen. Now, in our last video, we noted this big extreme here by the commercials and this one here. Now, what you're going to see on this extreme, is the speculators going to drop against them. Commercials just come in and buy, speculators come in and sell. This important low is warned off by the commercials, and it's a 500 pip rally. In the last video, we were saying we expect this level of buying from the commercials to trigger a rally of 500 pips or even more. Now, it actually hasn't happened yet. We've got the initial push off here, But what we see is that the commercials shed a few hedges. They'll always do that, just as they did it here. And speculators, a few get hit on stop, so they basically lighten their positions as well. But they're still pretty extreme. What I've noted this week is after being flat for a couple of weeks, the commercials have stepped up their buying into that low. What I think they'll continue to do is continue to buy, and we're going to see at least a 500 pip rally. Now what I want to do is go to the chart so we can draw some levels. Right, we're on the USDJPY. We've got the chart the right way round now. Just before I draw my levels, just want to go through the bullish JPY fundamentals. Why are the commercials so bullish of the yen? Now, you can obviously just go with the commercials with your trading and not know the fundamentals. We just like to know them. Gives us a little bit more confidence in our trading. And I can see why they're so bullish. In my view, rate differentials, well, they clearly favour the USD. We saw the Fed on Wednesday. They raised rates. They pointed at more rate hikes to come. You can see the market buys the USD into the Fed, but we can't go through the 114 level, and take out this cluster of candles here and come down. So for me, that's very bullish for the JPY, Japanese GDP. I think I mentioned it last week. Actual GDP, sorry, I can't say it, came in at double the preliminary estimate. And if you look at the Japanese economy at the moment, a lot of talk about how, Eurozone economy is recovering. I think that's debatable. But in terms of Japan, it's clear you've got really good growth, a tight labour market, high business confidence, inflation is rising. That means stimulus reduction is coming. Now, if you think back to when the ECB just hinted at stimulus reduction, okay, that sent the euro on a 1,000-pip rally against the USD. I don't see why this can't happen with the JPY. Bank of Japan have already hinted that stimulus reduction is not too far away. Okay, so the stimulus is at its peak now. It's going to come down. It means Japanese yen is going to have a big rally. Final bullish fundamental, risk off. Had risk on markets at the moment. Japanese yen has not been falling hard. If we get risk off, the Japanese yen will soar because it's the world's #1 safe haven. Now, in terms of the chart, here's the first COT extreme we noted. And what happened, obviously, the commercials and speculators battled here. Commercials selling hard, speculators buying. Breaks in favour of the commercials, 500-pip decline. In our first video, in terms of the USDJPY, we noted that the COT extreme over here was bigger than the COT extreme back here. So we should get a move down. And for us, that candle here is the exhaustion. Can't take out the previous tail. Settle back. No more buyers. We expected decline. And we got a nice move to the downside. Okay. And we banked out a really decent profit. We did come in again. And we got stopped out and moved above the 20-day moving average for a loss. It was a smaller loss than the profit. But I personally thought the USD would continue down. But obviously we get the rally into the Fed. This is the day before the Fed. It's also the COT report candle. And the commercials have obviously sold this rally. And we figured that basically, the USD would not go higher, okay, because the Fed was expected. Everyone expected them to hike rates and, basically point to future rate hikes. So could it get better for the dollar? We didn't think so. So all we're going to do is just come in, beneath the candle, okay, or this candle bottom here and that body there. She comes down quite nicely. Now she's bounced back a bit. Now at the moment we're short for 113.30. And I put the stop at entry. I personally think that the US dollar is going to fall next week. On Monday, for anyone in the Member Centre, I may just take a small profit and look to re-enter. Now, if you want to come into it fresh, where would you come in? Well, I think it's significant that we've got back, just held the 20-day moving average, okay? I would be looking, that is your level to come in through, in my view. Okay? And if we break that level, I'm going to ignore these tails. I'm just not interested in those, just simply because of the COT extreme. I think we'll then sell off, okay? Now, if she rallies back to here, I think that's pretty good resistance now. So anywhere up towards that double trend line resistance, I'd sell. If you were selling up here, if you were selling up here, where would you put your stop? Stick it back behind 114, like 114.45, something like that, okay? What if she comes through here? Where would you put your stop? I'll put it at something like 113.80, okay? Where are we going to fall to? My own view is if we start to sell off next week, you obviously got 111, okay, as the first support level. I just now don't think it'll hold. I just think, there's a lot of stops to be hit, okay, and they're going to be hit all the way down and just take us through 111. I'm going to go for my target, just down towards the 108 levels, just above 108. I've got 108.10 there, so I just think it'll get down there. Be a good profit if we do get down there. We'll have to see. Also, my next level down, if we break through 108, will be 104. Just so bullish of the end, really. Now let's go and look at the next setup, which is going to be EURJPY. Right, we're on the EURJPY daily chart. Just before I draw some levels, I just want to go through the COT net traders positions. You don't get them for the crosses, but they're easy to work out by just totaling what the groups have got in the two majors to make up the cross, and that's what we've done. Speculators 6.8 to 1 in terms of longs over shorts, so pretty bullish. Commercials 5.6 to 1 in terms of shorts over longs, so pretty bearish. Divergence 12.4 between the two groups. Regular viewers will know we always like a divergence above 10 because you're normally looking for a move in favour of the commercials. Now, if you'd look at this chart purely technically since late September, it wouldn't look too exciting, would it? It just looks like choppy sideways action, which it is. But when you look at the COT net traders in association with this, you kind of see the chart a different way. And I now feel that basically the euro is just going to sell off hard to the downside. Now, in terms of 134, we've been noting this since September. This is a level, okay? Every time the speculators try and buy the euro and force it away from 134, the commercials come in and sell against them. So here we come down a bit, have another go there, down, another go there, down, another go here, down. So, basically, commercials are selling into that 134 level. The specs don't have enough buying power to take it out. Now, on this candle here, when we come up again towards the 134 level, saying at the member centre, we just felt that the ECB last week would not be particularly bullish about stimulus reduction. They'd be very cautious, and that should send the euro down, which it did actually. So we do a trajectory line there. The euro has come down. Now, we're in at 133.60, it's 132.30, so not really much profit at the moment, just 130 pips. But I think we're going to see the big breakdown now. And 20-day moving average on the trajectory line there, first level of resistance, and then you've got a tail and two bodies right on a round number behind it. Okay, so 133, I think that level is going to be hard to take out there. This here for me is exhaustion. Okay, now I think we're going to start selling off. So if you wanted to come in fresh, where could you come in? You obviously sell a rally or sell a break of the next round number, 132. If she comes through 132, say 131.70, I think the stops are going to get hit. We're going to sell off hard to the downside. Your stop would need to be back behind 133, 133.60, something like that in my view. But you get a little bit tighter. But if we start selling off, I think we're going to see an accelerated move to the downside. Now, a lot of people might say there's some support here. I don't think so. Or here, there's plenty of tails. I just feel the stops are going to get run, and we should move down quite nicely. Now, where actually do I think we're going to run down to? This is with the COT in mind, okay? For me, it's going to be here, 128. Okay, which is about a 400 pip move, isn't it? In terms of, why can't I get the line straight? There we go. About 400 pip move. That would be in line with similar breaks in the past when you get divergences as big as we've got. Okay, now that's my first target. But over here, I've noticed stimulus cut expected. This one, the media started talking about the ECB would have to reduce stimulus, and then the euro goes on a really nice rally. Yeah, I said it when we were doing USDJPY. I think the Bank of Japan are going to do the same as the ECB, okay? And in terms of a longer term target, I'll go for 124. So 132 to 124, obviously it's got to come off, but that's a lot of pips. It's 800, okay? I just think this trade has got really good risk to reward on it. It carries our biggest position at the moment, and I think we'll be adding if we start breaking down. I really like the look of this trade. Right, let's move on now to our last pair, which is going to be GBPJPY. Okay, British pound, Japanese yen daily chart. First of all, COT net traders positions, speculators 5.7 to 1. Terms of longs over shorts, posed by the commercials 5.1 to 1 in terms of shorts over longs. Divergence just above 10 at 10.8. Now, I did do a video on this pair last weekend. Just for new viewers, I'm just going to quickly recap how we're playing this trade. Now, if I draw this resistance line here, we were saying last week, this poke through the double top. No more buyers, okay? Slump back. We were saying, yeah, the pound was basically a sell through 150, 160. Just let her get away from the round number. And she sold off quite nicely, actually. So we're now down at 150, but I don't think it's the end of the move. Now, in terms of resistance, you've got a round number at 151, okay? You also got 3 candle bodies there, so we've got double trend line resistance. Now, if you want to come in fresh to this trade, where would you come in? My view is we settled right back at the 20-day moving average at 150. You want to get clear of that and the round number. So I'm going to say come through 149.70, I think would be a reasonable level to enter. And then see if we sell off. Now, the first level I think that is going to be targeted is got good support at 147, okay? However, with the COT the way it is and the way we view the yen fundamentals, I think that level could easily break. Yeah, stops of the speculators are just going to get hit to take us down to the level. Then I think we've got the potential for a run-on down to 143, okay? Now, in terms of a stop, where would you want to place your stop? Don't have it too close to the round number. I think at least 150, 160, okay? Or maybe 150, 145. But yeah, just make sure you're out of the turbulence around round numbers by at least 30 pips, okay? So it'll be decent risk to reward trade, in my view, if it comes off. In my view, very bullish of yen fundamentals. I think, now in terms of the British pound, yeah, when we came into this trade, yeah, we're saying in the member centre, yeah, the Bank of England, we're going to send the pound lower. They're going to be very cautious about interest rate hikes going forward. They were. On the other side, we've got those very bullish Japanese yen fundamentals. I think there's more downside to come. So I think another decent risk to reward trade. Obviously, we have to see how these trades pan out because obviously things change. So it is my view as of right now, of course. But yeah, as you can gather from the video, very bullish of the yen. We'll see how these pairs work out. Perhaps do a video updating them next week. Thank you very much for watching me as per usual. Take care and have a good day.